Hey everybody, JD here with a Fireside Trader 2 Sigma Income Cash Machine daily trade. We've got a good one for you, but before we get into the details, today's trade, I want to remind everybody to please give us a thumbs up, like this video. If you really like this kind of content where we're talking about putting cash into your pocket utilizing credit spreads, well, subscribe to the channel. We've given out quite a few recommendations in these videos, and we'll continue to do that here. If you want that kind of exciting content, make sure you subscribe to the channel. At a minimum, please just give us a thumbs up, like this channel, and we'll keep giving you great trading ideas. In today's trade, I want to talk about a gold mining stock, Agnico Eagle Mines. Before I get to that, real quickly, a reminder as to our very simple formula for creating wonderful credit spread opportunities that we can take advantage of and exploit utilizing this very simple formula. First, we're looking for stocks that are trading 2 standard deviations above or below the mean, number one. Number two, we want to use very tight expiration options. We don't want to hold on to these credit spreads for very long. We want them to expire worthless, so we keep that cash. In this particular case, we're always going to be using Friday weekly expirations, and in the case of Agnico Eagle Mines, the stock we're going to be talking about today, we're using the February 27th expiration. Then finally, we're looking for stocks with very high implied volatility. We want option premiums. Premiums are at a premium in our 2 Sigma income cash machine environment, where we can sell that premium on a very quick expiration, a quick turnaround type trade, and put that cash into our pockets, and you can keep that cash as these options expire worthless. So in the case of Agnico Mines, let's start with just a quick look at the chart here. Shares are trading 2 standard deviations above the mean at $239.58 as I record this video. You can see that's above 2 standard deviations above the mean. Now, if you look at the last year on this chart, there haven't been many breaches of 2 standard deviations above the mean. And when it does break above 2 standard deviations above the mean, it doesn't go very much higher than that. And that's the key to this, because we're going to be selling a far out of the money expiration option that can put cash into our pockets, and the probabilities of this stock going up to that strike price are very low, especially when we're already trading above 2 standard deviations above the mean. That is the key here. And in this particular case, we can sell a strike price of $250. That's $11 higher than the current price. The stock would have to move about 5% higher to get to that strike price. And again, as we've seen looking at this chart over the last year, that just does not happen very often. So the odds are very much in our favor. That's what we like, because we are putting the cash in our pocket on an option that's going to expire on Friday, February 27th. So what I want you to do here, before the market closes today, I would go ahead and sell that 250 strike. You can buy back the 255 strike. That's your insurance. That caps your risk at $5 per contract minus the amount of premium that you're going to collect. Now, I know that seems like a very high risk reward type scenario, but keep in mind the odds are so much in your favor because we're selling a strike price that is way above 2 Sigma. Again, the high probability trades, putting cash into your pocket, we want that. We don't want to lose on these trades. We want to win. And that means we're not going to maybe win as much, and maybe we risk a little bit more when and if we do lose. Over the last few months, I'm running these trades at about a 95% win rate. I've made about 21 recommendations. 20 of them have been winners. One of them has been a loser. And so at that percentage, you're going to come out way ahead of the game. So what I would do in this particular case, right before the market closes, you can sell that 250 strike, buy back the 255 on the Friday, February 27th expiration options. Current pricing of that credit spread is about 60 cents. So you're going to put 60 cents in your pocket, and on Friday, look for that option to expire worthless. That's all I have for today, folks. A very nice call credit spread on Agnico Eagle Mines, a gold mining stock that is trading way above its skis here now, 2 standard deviations above the mean. Good luck with all of your trading, folks. This is JD for the Fireside Trader. As always, good luck with all of your trading, and I'll see you all next time. Take care, everybody.